Jeremy, thank you for joining us for this interview today. The crypto industry is so frustrated, and it has been for a really long time, about the lack of regulatory clarity coming out of DC. People in this industry, they want to get to work, they want to get bills, they want to comply with regulators, but they still don't have clear guidelines in place for that. And you put out a report and you argue that there's a greater need for regulatory efficiency more so than regulatory clarity. Explain that.
The State of Regulation report is meant to be a resource guide. It's meant to provide context and to some extent demystify the regulatory landscape and focus on three primary legislative initiatives that are being presented to Congress. And what I mean by regulatory efficiency versus regulatory clarity is that there is such a high volume of regulatory requirements in the industry right now. And to be fair, there are certainly points within those that need clarification. But for those of us in industry, we have to comply and adhere to that full spectrum of regulatory frameworks. And so it would be more beneficial, or at least equally beneficial in industry, to have regulatory efficiency. This notion that regulations will interlock to build a comprehensive and comprehensible and intelligible map for us to follow to empower digital builders while removing obstacles for compliance teams.
Okay, so how do we reach regulatory efficiency, and who is the onus most on to help achieve that?
That's the devil in the details. I think the onus is on, first and foremost, a federal application of regulatory requirements. And I think the DCCPA, comes closest to achieving that initially, because they overtly state in that legislative proposal that if passed into law, that will supersede state requirements, which would be very beneficial, because what we have to do is adhere to state level as well as federal level and international level, but also an understanding amongst states, because this is right now primarily where the regulatory gaps are being filled. If you look at the Model Money Transmission Modernization Act, MMTA, sometimes called the Transmission Act or Money Transmission Act, that is intended to be a standardization amongst all states for regulatory requirements within digital asset industry. But what's happening is individual states are applying different requirements and state level interpretations on top of that act that gets us right back to square one of trying to adhere to, a huge number of different frameworks. So having a federal structure in place that would start congressionally with enacted legislation to create that universal standard and universal approach would be very, very helpful.
So as of today, it's a new kind of market. There are new products in the industry. And what is sort of the biggest obstacle for regulators right now?
I think there are two primary obstacles we're facing right now. The general concept of education and understanding is an umbrella around it, but in specifics, first is the mantra of same rules, or same risks, same rules that we frequently hear. Trying to apply current laws that don't account for the capabilities and expectations of digital assets and this novel financial ecosystem. I think some that are trying to be applied can actually be burdensome for larger crypto companies. You look at, of course, the Howey test is the ultimate guide that is the biggest question out there, which is a 90-year-old standard. But there's others that are more on an operational level, equally challenging to some extent. The 1980 Paperwork Reduction Act that can't keep pace with how fast crypto moves. The Freedom of Information Act from 1966 is a hindrance in terms of reporting obligations. Even the tax code from 1984, that's part of the Infrastructure Jobs Act that you mentioned, that's going to be applied, or at least proposed to be applied, to digital asset companies and their taxation and reporting requirements. Requiring the same reporting requirements as physical cash is really challenging to the industry. And I think that the second part of that, to answer your question about the biggest challenges, is the current narrative. We're all familiar with the misrepresentation and, in my opinion, the negative misrepresentation, misinformation surrounding the industry. I was a former federal agent. Due to my age, my investigations were credit card fraud and identity fraud. At no point in time did anyone question the legitimacy of the credit card industry based on the actions of those who chose to violate it for financial gain via criminal means? But that's what's occurring within this industry. It's really challenging and frustrating to see that narrative continue, and I think be a barrier to sound, productive, enabling legislative process. You mentioned the president and CEO and the reports that followed that. The president and CEO had 6 objectives for the industry, and 4 of those were very enabling and forward-leaning in terms of harnessing the industry for positive gain. 2 of which were, safety, security, and necessarily so. But the reports that came out were so focused on, the risk and constraining and concern about the industry. The primary exception is the Department of Commerce that really took an approach of trying to empower and bring this technology, harness it in ways that could be beneficial. And I think that needs to be reflected similarly in any type of legislative package or eventual bill that becomes law.
What's the most important piece of legislation that's in the works right now, and why?
I'd like to cheat the question and say all of them, because we are trying to have guardrails in place. It's really hard to play a game when you don't know the rules, and that's where we sit right now. So we're focusing less on which one or who regulates, and more focusing on the how and the importance of it. We talked a lot about the momentum and the positive indications, and they're certainly out there in terms of bipartisan approach and support of the industry. And so that's what we are really pursuing and putting momentum behind and support behind. We're not simply seeking regulation for the sake of regulation, but the right regulation, good policy, good law that achieves that efficiency that I talked about at the state, federal, international, and international level. And focusing not so much on the generalities, but really the function of the assets themselves. We need legislation that recognizes the complexity of the technology. It doesn't fit squarely maybe into one regulator or one set of rules, but being aware of, I think the 3 primary bills we mentioned in the report all are aware of the fact that the CFTC as having exclusive jurisdiction is the appropriate way to go, but not, as sometimes is reported, shutting out the SEC. The SEC has a role, and there are times when the securities determination is appropriate, but having that balance between what is proper as opposed to who is doing it, I think, is the focus.
In the report, you highlight the big 3 to watch. That's the Digital Commodity Exchange Act of 2022, the Lummis-Gillibrand Responsible Financial Innovation Act, the Digital Commodities Consumer Protection Act of 2022. And like you sort of said, maybe the focus shouldn't be on these individual pieces of legislation and how they progress, but what should we expect out of the first half of 2023?
I don't think the door is fully closed on 2022. I think there is some enthusiasm and some momentum for the DCCPA that you mentioned. And I think there's recognition that, as you see some of these challenges that everyone quotes, as I said, in the misrepresentation of fraud, scams, security, and so forth, the recognition is we need these regulations in place. We need these security measures in place in order to help the industry grow, but also protect consumers, which of course is very important. So I think there's a slight chance that the DCCPA gets, out of committee and perhaps moved into a larger package, whether it's omnibus or NDA or others. But absent of that, in 2023, I think there's a lot of momentum for stablecoin legislation. I think that may be the first way to approach it because that is a more linear, logical process that sometimes is easily understood in terms of tracking reserves to actual tokens. And it's a cleaner and more achievable process that will be the foray into more complex and all-encompassing legislative actions that could follow.
There's this phrase that might be apt for this slice of crypto, but shooting for progress and not perfection. It's been a long time. It's always changing. When can we realistically expect to have what we've been calling clarity?
Yeah, Tanae, I think you phrase it really well in that it's a process and an evolution. There's not a chalk line or some tape we're going to break on a finish line here. because the technology is evolving and progressing. I think if we start with, guardrails in place that allow the industry to continue to grow and innovate and do so safely, the RFIA that you mentioned, Lummis Gillibrand, has provisions for sandbox requirements, which are basically Hester Peirce from the SEC call them safe harbor, however you want to call it, but a regulatory oversight of implementation of the industry so that it's done hand in hand with regulators and lawmakers for high levels of consumer protection. And once that takes hold, I think we'll see those legislative guidelines put in place in broad categories and then move into more specifics. And I think that's important about the industry as a whole. A lot of times it's discussed, in my opinion, in binary ways of either decentralization or centralization, deregulation, regulation. I don't think they're mutually exclusive ideas. I think we can find market entrants and market opportunities along this spectrum, similar to the internet. And I know that's an overused analogy, but you have surface web, you have deep web, and you have dark web. Those are all authorized or open marketplaces utilizing internet technology, but they all have very different market circumstances, risk pictures, and rewards and consequences for those who enter into those markets. I think we'll see similar application and similar development here. You may have some, digital asset, crypto type opportunities that are heavily regulated that may not appeal to those seeking a more decentralized or privacy enhancing approach.